Good morning, gang. Okay, and visitors. So we have some visitors today watching, and I hope you enjoy this. Give you an insight on what we do. All right, first thing we're going to do this morning, like we do every morning, we're going to take a look at the market. And the most important part of the market is the banks, because the banks is what drives the whole stock market. So XLF, we're going to look at, as we do every morning, and it shows on our chart, okay, on this chart, which is what we call our swing trade chart, okay, that we use for trade for 2 to 5 days, that it's having difficulty breaking out. If we bring it back a year, okay, it gives us a lot of information, and it's telling us that we have a consolidation, another consolidation over here, a little consolidation up here, and it also shows that the buying has, if you look at all the green, the buying has kind of dried up. There again, the biggest problem people are having right now are the values of these stocks, and that's the real problem. They don't want to be overpaying. So, but the market, they're going to continue to try to drive the market even higher. Who's they? That's the Federal Reserve, who's controlled by the small group of people who actually control the Federal Reserve. They're the we call the 1 percentile, and so they're going to try to do whatever they can to keep driving this market higher, because they get 80%. Remember, their gains, they control 80% of their wealth comes from the stock market. So what we're seeing right now, just a little bit of congestion up here. So the other thing we look at quickly is what is going on with, that's the bank stocks, what's going on with the semiconductors. The stock market, the big investors, the hedge funds, the guys at Wall Street, the mutual fund managers, they look at the market in two separate pieces. They look at the market as two. One, banks. That's the big thing. The other one's semiconductors. And that's how they see it, even though that's not true, but that's how they see it, because that's where bulk of the money goes, and that's what drives the market. So anytime that you have a stock, this represents a stock, and you want that stock to go higher, you got to have the bank stocks first driving, okay, the overall, let's say this is your stock up here, you got to have the overall bank stocks pushing up the overall market, which pushes up your stock. So let's say this is GE, pushes up your stock. So everything starts with the banks, and if the banks aren't pushing up the market, not going to push up your stock. Your stock can go up about 1/3 of its normal distance, and that's about it, because it's the banks that are important. Now, if you have the semiconductors plus the banks going up together, then you start out in the morning with a very positive number. But this morning you can see we have the market just flat. It's at 2 points. So the problem is we don't have the banks leading the market this morning, so I know that. And I also know that I don't have my semiconductors leading the market, and they're both just flat. Okay, so that gives me a lot of good information to start with. Next thing I'm going to do is, now that tells me what the S&P is going to look like, and here it is. So as a result of XLF and as a result of SMH, I now know, okay, that the S&P is going to be very weak, because of the way those two are setting up. So let's go take a look at some of our stocks. We like to look at our first 5 stocks. And by the way, gang, what I'm going to do is, on the exchange traded funds that I trade, and I invite people to trade when they join the gang, to come in, and they can go in the same exchange traded funds I'm involved with. And at the end of each day, at the end of the night, when we at the market close, I do a video and explain what I am doing with the exchange traded funds that I'm in, and you can copy and mimic what I'm doing. You don't send money into me; it's not a fun. I'm going to do the same thing at the end of each day with the 5 stocks, because sometimes it's going to be posted in the alert section. Matter of fact, JR will show you right now where it's posted, so you can go in and get it. And the reason why I'm doing that is because a lot of times during the day, I always tell you, if you're going to follow my 5 stocks, the same 5 stocks I'm in all year, and you only want to do what I'm doing and follow the stocks that I'm involved with, okay, the problem is sometimes, okay, here we go. Yeah, go ahead, do it. Yeah, just hit it. Yeah.
All right, so all you have to do is go to Class and Updates and then go to Alerts, which for some reason is... And there'll be a separate section for the... I'm wondering why our Alerts page isn't coming up. Anyway, there'll be a separate section for that Phil's 5 stocks, and it'll say Phil's 5 stocks, and then we'll just put a video up every night. And
all right, let's see. Let me see. Try to put that back up again. See if we can get it back up. Try it again, maybe.
Yeah, it must be something wrong with WDS today.
Okay, all right. But what we do, you go to that section, and there's going to be a video for the exchange traded funds, and I'm going to do a video at the end of the night for the 5 stocks. Now, the reason I'm going to do that is because many times, like for example, let's take Intel. Okay. Now, the other day I gave you instructions. I said to you, don't do anything unless I tell you to do it. So if you're following my 5 stocks for a year, you'll make your 10% return if you just do exactly what I tell you to do and nothing more, nothing less. But a lot of times what will happen, because I'm teaching and I'm doing my thing during the day, I'll come out and say, all right, like in class, I'll say, like I did the other day, if this breaks through this support area right here, we're shorting it, add to your position. Some people may not hear that. Okay, and then, so yesterday it broke through, we added, and then today it dropped. We're already in the stock, which is the benefit of staying with the same 5 stocks all year because you're already in it. So now we're making even more money. So what I decided to do is, so that you make sure you get my alerts, is at the end of the night, I will go in and I'll go through every stock and tell you exactly what I'm going to do. Let's take Goldman Sachs. Goldman Sachs is giving us a buy signal right here. We also have a buy signal on our MV2 color-coded chart. So I'll tell you, if you're going to do a swing trade over here, wait until it breaks up above this area right in here, this R1, and then you can add some shares, but you can get more aggressive when it gets above the 231.18. So you'll know that at the end of the night, so then you're prepared for that, okay? And that's what I'll do at each stock, to exactly what my plan is, okay? IBM is another good example. We're now sitting at R1. We're below the 33%. And as we always tell you, if you're a new student, we always want you to make sure our stock right here, we want this to get up. This is called momentum, get above 33% if you're new. And then when it breaks out above this R1 right here, when you got the R1 line right here, you never buy into it. You got to wait till it breaks out. When it breaks out, I'll tell you, add to your position. Now, how much you add is up to you, okay? Because everybody's got a different pocketbook. Everybody's got a different, fear, and everybody's got a different, pain threshold. So that's what I'll be doing. So I'll go through those at night. And, of course, during the day, I'll give you whatever alerts there are. But I thought that'd be a lot better so you don't, in case you're not hanging around and you want to know what happened during the day, what I do with these stocks. And then you can fix or do whatever you want to do the next morning. Okay, so let's continue on here. So let's go take a look at what's going on now. I want to look at the dollar. Okay, and the dollar right now, okay, she's been gapping up after this severe move down. Now, the reason why we've had this gap up in the dollar, and this is why gold is going down, is because what's happened now is that on June 9th, when they raised rates, the dollar will go up. Because when you raise rates, overall, it sends you a message the economy's doing well. Nobody ever raises rates when the economy isn't doing well. That's the way it used to be. We raised rates in one of the worst economies and one of the worst data we ever had. That terrible data. We haven't seen this bad data since the Depression, and she's raising rates because the market is detached now from data. So that's why you get a move in the dollar, because the folks in Europe, when they hear that the United States is going to raise rates, they come in and they start buying the dollar. And when the dollar goes up, the 10-year Treasury moves up. Both going up at the same time, the 10-year Treasury and the dollar, signals looking forward that the economy is going to be doing better. But that is a fake signal right now, okay? That was because, again, when the UK finished their election, okay, over that weekend, The 9th came on Monday. They were disappointed. The Europeans dumped their euros. They came over here, bought dollars, pushed the dollar up, pushed up the yields, and the gangsters on Wall Street were able to take advantage of that and pump the market up to get you to buy. And they could say, look, the yield is going up, the dollar's going up, this is a good sign. And oh, by the way, the following Wednesday they're going to raise interest rates, and they never raise interest rates unless the economy's doing well. Well, of course, the economy wasn't doing well. Okay, so that's why the dollar is up. And as long as they can keep trading into the promise, and this is what Wall Street does, they continue to deceive you, and they deceive Americans. And they always trade into the promise, into the fantasy, into the promise that we're going to get an appeal, Obama repeal, okay, infrastructure, big tax cuts. But I want you to think about something. Why are we going to be so lucky now to get Obama appeal? How are they going to get that passed? When Obamacare, because think about it. For 6 years, the Republican elitist establishment put in 50 times a bill to repeal Obamacare under Obama. Since Trump has been president, they put in one, and it's not even. It went through. You can't even get through Senate right now. So why is it 50-1? Because the establishment, they do not want this bill to pass. Okay. And so they felt very comfortable knowing the 50 times they could say, look, we're really trying to get the health care bill repealed, Obamacare repealed. Look at 50 times. But all 50 times they knew it would never pass. They knew they had the comfort level Obama was going to veto it. That's why they did it. Then when Trump came in, he wants to pass it. He would never veto it. They only put up one bill. And why don't they want the bill to pass? They don't want the bill to pass because they can't keep this rally going if it passes. Now, what's that mean? What it means is that Obamacare killed, remember, our labor. Because remember, there was a threshold that if you switch people to part-time, the companies didn't have to pay for their health care. And we ended up with more part-time people going from full-time jobs to part-time jobs, and it just killed our labor market. And that's what they want, because if you have a low labor market, that gives the guys on Wall Street who make money in creating bubbles. And that's exactly what their point was. That, look, let's continue to say, anytime you make a bubble, the reason why the bubble's made is because the excuse is we're going to cut rates and we're going to have easy credit because we have an environment of low wages, okay? So we got to help people. And all that does is get the people getting into more debt when they shouldn't be. But what it does is mask really what Wall Street's doing. They now can print money and they can buy stocks and push stocks way up and give the credit to the consumer consuming. And it's not, they shouldn't get the credit because they had nothing to do with it. The reason why they were buying more is because they went in, all they were buying is debt. Like I explained yesterday, if you got $25,000, $55,000 income, and you're in 25 grand in debt, and you cut interest rates down, easy credit, they can buy anything they want. By the time they reach up here, that same 55,000, they now have 50,000 in debt. So, and what happens with a bubble, they stop buying at some point because they got to pay the debt back. So they got 50,000 against 25 instead of 25 against 55, and that's why deflation hits, prices drop because nobody's buying, people get laid off, and then that's why you get your crash. So this is all wonderful because the Wall Street guys, the 1 percentile, made a fortune in the stock market, but they gave the credit. They were able to mask what they were doing, artificially pushing the market up, masking it with the consumer, say the consumer's doing wonderful. Look how he's purchasing. Then they started over here another one. But the only time they can do these, and they did this one here, you have to have an environment of low wages. So my point is, if they take Obamacare and fix Obamacare, it kills that. Okay? It hurts. It hurts the 1 percentile creating these bubbles. And as long as they keep exporting our jobs overseas, that's another reason why they export our jobs overseas, so they could create these bubbles. So as long as the 1 percentile, who 80% of their income comes from the stock market, they can create these bubbles. And that's why they did offshoring of all the big jobs, so that it created an environment of low wages, because our big jobs, big paying jobs, went overseas. So if you take and put your big jobs overseas, and you have a bill like Obamacare that kills labor, where most people are part-time, and in all the jobs, as you know, 72% of the jobs that are created are all lousy waitress, bartending jobs. It keeps a wonderful environment to keep this scam going. And so that's why they do not want to pass this Obamacare. So with that, knowing that in mind, that's why we don't pay attention to fundamentals. We don't care what a company's doing. We don't care about the margins. We don't care about any of that. Because all we know is the stock market will continue going up as long as they keep printing money, keep interest rates low. And that is why, think about it, back here when Greenspan, over 2 years, he raised the rates 17 times, from 1% to 5.5%. On B, over 2 years over here, she only raised rates 3 times, from 0% to 0.75%. Now, why did she do that? Why could he go from here, from 17 times he had rate hikes, from 1% to 5%? She only does it 3 times because the economy is lousy. She can't, we're not even 1%, we're at 0.75%. So she knows she can't raise rates because the economy is bad. But they're creating the economy bad to make sure wages are low and all that, so they can keep creating the bubble, because that's what masked the bubble. Think about it. Every time they print money and they give it to the banks at 0%, they give it to CEOs at 0% so they can buy their own stock buybacks. The only way they can keep doing this bubble creation, is if they can say, we're doing it for the better good. We're doing it because we're lowering the rates and we're helping people. And what's that masking? Their scam. Okay, their big stock market scam, rally scam. So that's why if you're going to be looking at fundamentals, you're dead. Okay, you can't make money because you're missing the point. You got to be following the money. So right here, let's go take a look at our stocks. Goldman Sachs. If I look on this chart right now, it's green. That means money is coming in. But this is a long-term chart. This is, I'm trying to stay in for anywhere from I can stay in anywhere from 2 to 5 months, 2 to 5 years. Okay, here on this chart, 2 to 5 days. So right now, all I know is my Goldman Sachs. I'm not going to do anything yet this morning because we have no action going on this morning. Look, the market's flat. Why is the market flat? Because they're stuck now with these bubbles. They've taken this bubble, and Trump, remember from right here from November, ran the market up 17%. He created a value of $4 trillion. Remember, from here up to here, they injected $3 trillion. Okay? The gangsters printed and injected $3 trillion. And to buy stocks. They gave the banks the money to go out and buy stocks to push the market up. This was after the crash, the housing crash. So, and from here up to where we are here, let's say use 2016, they were able to create 13 trillion in value for the 1 percentile who control 80% of the stock market. So they increased their net worth by 13 trillion by printing money, keeping interest, and they masked it by, again, keeping low rates, easy credit, as long as they could use the excuse that the folks, okay, we have an environment of low wages. So 13 trillion. He comes in, Trump, we thought he was going to fix all this and stop all this game playing. He decides to do the same thing. What he was criticizing Obama for, he was criticizing Obama for this. He called this a big pig rally, big fat pig rally, because he's saying the only reason why it's rallying is because what I just told you, because they're keeping interest rates zero, near zero, or very low, and they're giving easy credit, and that's why the market's going up. Remember, stocks are supposed to go up because of earnings, But because we have no earnings, because the people don't have any money to go in and buy stuff to push company profits up, so they just push the stock market up. So he says, remember, he said, hey, this is a big, fat, ugly bubble. We keep on pushing this market up. It's all fake. He becomes president. He pushes the market up from here to here, 17%. He creates $4 trillion in stock market increased value for the very wealthy, the 1%, on top of the 13. And now he's going, oh, no, I made a mistake. This is good. This is a great market. This is a real market. This is not a big, fat, ugly bubble anymore. This is my market. Well, he's going to own it when it does this, too. So now that we know that, let's get to buying some stocks based on money, okay? So this morning I got some stocks. The power stocks I want to go to are the stocks that where all the big hedge funds are buying, okay? And then we'll start taking some questions early. Okay, so yeah, let's take our power stocks. Yeah, let's take our power stocks that again, these are stocks that the big hedge funds have, okay? So let's go with the ones we have too. 3M. So this big power stock, okay, all right, has been doing beautifully. Look at this, making an all-time new yearly high. See, it's a new year high. So this one here, we're going to continue to buy and add to our position every time it makes a new high. So again, today we're not going to add to our position because we'll add if it does this today, later on, or tomorrow. Okay, but we're going to keep our eye on this because again, you can see it's a very powerful stock. So we're going to keep our eye on 3M. We're also going to keep our eye on, and remember, we bought. If you look, we purchased. Just give me a second here. We purchased 3M at $208, one of the times, $208, okay, and 69 cents. So we're doing pretty well with it. The other one we're doing is Johnson & Johnson. Okay, that's turned to be a big power stock because it's over a year, see it? All right, and if I bring it back today to 3 months, yeah, it may engulf this guy here. You buy it or add to your position when it engulfs the previous day. In other words, when this is bigger than this, and you want to make sure there's no big wick, that's called a shadow. You don't want that big shadow, because what a shadow is when you have a stock that goes up like this, and she's solid green, and there's no wick on it like this. Then all of a sudden, what happens is sellers come in and hit it like this. They come in and start selling it. She'll drop. And what's left behind is the shadow. See the shadow here and the shadow here? So you don't like buying when there's big shadows because that means there's sellers around. But if it's making a new high, we could be doing pretty good with this stock today too. So we'll watch this. Right now there's no action in the market. Market's flat. All right, let's go to, so our 3M, we bought at 208.69. Okay, and it's doing pretty well, but don't do anything unless, here's today, unless it moves up. It turns green, and there's very little wick on it, okay? The other one that we're going to continue watching is our Johnson & Johnson, okay? And same thing. Today we'll buy it or add to our position if it goes up. It's got to be bigger than this guy, and there's not much of a wick. Johnson & Johnson, remember, we bought it $129.10. It's now trading at $134.81. Nice power stock, and you can see the momentum. It's over 80%. So very good. So we're doing great with those two stocks. So let's stick with those, okay? Let's go to I want to go back to our Intel, my 5 stocks, okay? Start with Goldman Sachs again. Goldman Sachs, you can see we keep hitting resistance here. If I go to the overall XLF, okay, it's telling you the same thing. They can't break out. You see the volume, the white line here? That's the average volume. They can't break out because there's not enough energy. Okay, that gives us the pricing power. Why is that? Because again, they don't believe, okay, the big investors right now, on June 9th, remember the banks were doing terrible. And even before that, and all of a sudden the banks started to move up on June 6th, right here. June 6th starts to move up, and they broke out right here on June 8th. And that's when it took off, and that's when they did the reversal. The institutions started to buy banks again, and they dumped gold, okay? They dumped gold. They did a reversal. So gold went down, and the bank stocks went up. And that was all rigged, okay, to do that. They needed to get the bank stocks up to keep the market making new highs because it leads the way. So right now, there's no buyers because people are saying these are kind of hefty right now. And that's why you see the market is only up 8 points or it's down 8 points. And if you look at the semis, okay, same thing. See, the semis aren't breaking out. So that's the problem for the market right now. They're basically saying, look, we were up 17% since November, and we've added 4 trillion value, okay? But it's not because companies are doing better. It's not because they're earning money, okay? That's the problem. It's doing it only because they're printing money and doing stock buybacks. So now they're getting, and when there's no earnings behind you, they start getting a little nervous, which makes sense. Okay, so Intel right now, what we're going to do at Intel, we're going to do nothing with it this morning. Okay, she dropped. This is called a gap down. That's very powerful. Okay, that's a very powerful gap down. And that, because what that tells you, okay, when they skip numbers, that's called a breakaway. That there was no buyers anywhere in between here. You couldn't even get a buyer. It was so bad. They didn't start buying till all the way down here. So what you do is you don't start buying it today or add to your position today. You wait until the next day, and I'll tell you when to add to Intel. I want to see, here's our trend. It's going down. It's red. So if I'm using this chart, I just want tomorrow to make, if I get this candlestick bigger than this one, and this red line still going down, it's telling me all the momentum's to the downside. This engulfs this one, which means I have good volume. I'll add. Over here, because I'm trading it in a period of a short time, okay, if I want today, I can move the candlestick over here on my 15-minute chart, condense the time frame to 15 minutes. This is daily. This is weekly. I can go weekly, daily, or 15 minutes. So I'm going to take a shorter time frame, and what I'm going to do is take this candlestick right here, okay, and I'm going to just push this guy right here. So here's my candlestick right now. Here's my candlestick. So all I'm doing is flipping the cover open to see the candlesticks inside the candlestick. Now all I need is to see if it's worth selling short. Okay, to make money going lower, I need to see strength. So how do I measure the strength so I can add to my position? Over here, I've got to see this red line right here break through 20. If it's not breaking through 20, it means I don't have enough sellers to make money today, pushing it down as of 1 minute after 10. Okay, so you never, even if it drops, you never sell short unless you're at 20%. Same thing if you're going to buy a stock. You never buy the stock unless the candlestick's at 80%. Okay, so Intel, just hold off. Don't add to it. Don't do anything. Okay, if you want to buy a Scout today, if you're not in it, this is the beautiful thing. We've been in this for over a year now, okay, and we were able to take advantage of this. But if you're not in it, you're looking to get in it, you can do a Scout. Just put on a couple of shares to engage yourself so you keep tracking the stock. All right, Schlumberger. Oil's been weak, and we've been short oil. And again, another advantage why we stay with the same stocks all year. We started short Schlumberger right up back here, okay, when it broke through this 200-day moving average right in here. She started to break here, but this is where it really started to break down. So we've been short a long time, and we're still short. So we've caught this whole shortage, okay, oil weakness all the way down, being with one stock, okay, because here was our sell signal right here, okay, and if you're going to use the sell signals over here, when this crossed over, you just sold it when this turned from green to red. As long as this guy was crossing over, if I draw a line up here, it would have been right about here. As soon as that was red right here, and this line crossed over, it's telling you, you got momentum, sell it short, it's red. Green, you stop shorting it. Red, you start again, and so on. So Schlumberger we're doing good with. So that's where we stand right now with our stocks. Caterpillar, we're not going to do anything with Caterpillar until it breaks out. If I'm going to do a 2 to 5 day trade, I want this to break out. So I'm not going to do anything with it right now. Okay, we own it, but I'm not going to add to it. On this chart, if this can stay red for another day, and this is my MV2 color-coded chart telling me the institutions are pulling money out. This is what's beautiful about this chart. It tells you the institutions, that's why it turned red. I want one more day. If I can get one more day, a confirmation, I like the third day. If I get the third day and I get this red line right here, which is momentum, and it just crossed the yellow line, I need to cross the 80% line. If that happens, I'm going to sell it short. And I'll probably do it right here, right underneath this guy right here. She breaks right underneath there. Okay, so we got a good opportunity selling short Caterpillar. Okay, but right now you can't sell it short. Okay, not until this red line crosses over. So we can't do anything with it right now. Okay, except again, just keep your yeah. Now, if you want to make money on the candlestick. What you do is, okay, if you right now I don't want to add to my position on a 2 to 5 day trade, and I don't want to add to my position on a 2 to 5 month trade. But what I can do is I can trade the candlesticks. I can move it over here, which is my Caterpillar, and try to make some money just for the day. And I can't do it right now, but if this drops below 20, and you can see how the candlestick's coming down right now. So here's the candlestick. Right, that's the candlestick right here. Just moved it over, popped open the cover, and as long as this drops through 20, this will keep coming down. And that means I can trade just the candlestick for the day. But I don't want to trade the stock over here until it makes another low, and until the red line breaks through the 80%, because then I'm safe. All right. Okay, so there we are. So let's take some calls, and let me help you with your stocks. Questions, not calls, questions. Johnson & Johnson is another one of our strong stocks, okay, power stocks. So again, don't add to it until it engulfs yesterday and you don't have much of a wick. Okay, I'll take your questions.
All right, and those questions, you can just email them to me, jr@philsgang.com. First up, Phil. VIX. This person's looking at the index VIXX. It's a different one. I don't know if we can pull that one up or not.
I'll use the same thing. Go ahead.
All right. So they're wondering, if the market starts to sell off, do you think that I could buy a scout on the VIX index?
Yeah, you can. But here's the problem with the VIX. The VIX is a fear meter. And the reason why we haven't seen the VIX go up, and we've never seen this before in the history of the market. Look at this.
Never had QE before.
Because why? Because the stock market's been going this way. Okay, we went up, had our bubble, came down, went up, had our second bubble, came down, went up, and then they started to do all the quantitative easing, printing all the money, and went up like this. And people knew, the investors knew, since 2009, the stock market couldn't come down because they were printing trillions of dollars. They printed $3 trillion to start buying the stocks right here, to buy all the bank stocks to push it up. Then they printed another $3.2 trillion they started out with 85 billion, printed 85 billion, and they were buying the bonds, so the bond market would drop. And when the bond market drops, that means the yield drops. It's not attractive. So China, Saudis, all the countries who buy our treasuries, try our bonds for the yields, buy them, they get out and they shift to the stock market, pushing the market up. So we got 4.4 trillion. They bought 4.4 trillion of these to push the market up. On top of that, they printed another $3.2 trillion to put into the stock market. They gave to 3 banks to go in and buy all the bank stocks to push them. This was after the crash, push the market back up again. And then they did another $6 trillion, printed another $6 trillion to get everybody to get CEOs to buy all their stocks back. So everybody knew that it's almost impossible for the market to go down because they read it to go up. And that's why there's no fear in the market. And that's why the problem you got today with the market, okay, if you want to go in and you want to bet against that, just put an advanced order at one of the highs, like right here, maybe 1753. You may get lucky. But right now, the reason why there's no fear in the market, because they know that the 1 percentile who control the stock market, they're doing fantastic. I mean, they're making tremendous money, okay, controlling the stock market and keep pumping money in to keep pushing it up. They don't need to know what companies are doing anymore. Don't need to know if they got any profits or margins or anything. They could care less. So, and who's going to stop the parade? We thought Trump was going to. Remember during his campaign, he said this is a big, fat, ugly bubble? Now he's changed, and he's doing exactly what Obama's doing. He wants to continue and take credit for it. That's what screwed things up. But it's an easy way to make money, and that's why we buy the big, powerful stocks like 3M that's making an all-time new high up here. You just keep buying them, okay? And then, of course, we monitor them. And this chart's the best to monitor it because, like today, it turned red, so we wouldn't buy it today or add to our position today. Okay, so let's take some more questions. So, VIX, no, I would just put an advanced order in next.
Yeah, that was at 1753. Also, you may want to think about, instead of just doing the VIX, you may have better luck with doing the inverse on SPY, like SDS or something like that. And we, of course, go over that in our updates. Next, I'd like to say hello to all the folks who are joining us on Facebook and Twitter and YouTube. We're tri-casting this class this morning. Thank you for joining. Again, my email address is jr@philsgang.com if you have any questions. Next up, what do you think about this person? He got a Scout, just 25 shares, and I'm not sure where they got in, but they're on RIG.
Okay, RIG. Let's talk
RIG
about the
is
oil.
the oil, yeah, RIG.
Yeah.
They just have a Scout on. I'm not sure if they're short or long. They didn't tell me.
Okay, the stock, you can see if you're going to be using this chart here 2 to 5 days, okay, you're doing fine. I hope you're short. You should be because you're below the 33% level.
I don't think they are because they're asking me if they're near the bottom, so that would imply that they're long.
And if you're short, okay, if you're short, just stay short because the red line's under yellow. And you're doing fantastic because the market, again, the stock looked doing nicely. And today, if I take this stock and check and see how strong it is, if I use this chart, it's red. So I'm just going to stay short. It's telling me institutions are pulling their money out. If I bring it back even a year, look at the money being pulled out all the way back to here. So let's bring it back 6 months. So if I was using my MV2, I'd been making money. As soon as it turned from green to red, I'd just stay short. And look at the return we're making. It's just telling us, hey, sell it short because it's red, okay? Over here, you're doing 2 to 5 days. So what I would do is just continue to short it. And what you do is this. Again, put it over on this chart over here. You want to make sure, here's our RIG over here. You want to make sure it's below 20% today. So here's what I'm going to do. So I take my candlestick. I move it over here. I'm going to take this candlestick, look inside it. So I'm going to move it over here, and I'm going to flip open the candlestick. See inside the candlesticks inside this candlestick, and it's telling me I'm below 20%. So it's telling me they're selling the stock nice, so I can sell this short. And there's no wick, there's no shadow, which is showing buyers coming in. So this is a good short today. Stay short with it. If you're long, I don't know why you would have got long on this. There isn't any long.
There was no
indicator.
buy pattern for the long.
There's no
reason
pattern
to be in it long.
No, remember, you only buy stocks. First of all, you need to find a W, and unless you never buy a stock.
Weekly goes up.
And there's no W. If you don't have a W, you can't buy a stock. That means there's no new money coming in. Even a V shape like this tells you it's not new money coming in. It's the people who shorted it just buying their position back. So there's some reason why you're doing this. So contact JR and see what you did wrong. Next.
CLF, same question. Do you think it's near the bottom? I would.
No, see, the thing is, when you get down below 12%, when it's red, and you see the K, okay, whether it's RIG or CLF.
Anything, yeah.
Okay, any stock.
It's all the same.
First of all, you want to make sure that you're going to start shorting the stock, okay, when you're supposed to short it. Okay, first of all, when she breaks back when she broke back here, this was a perfect short right here. See it? Perfect. This was a perfect short right here. See it right here? Perfect short. Over here was a perfect short, just crossed over, and it turned from green to red. So when this crossed over, it was right about here when it stayed red. This is a perfect short for you. Then you would have got out, of course, when it turned green. But right now, this is a good short, CLF. And what we're going to do with CLF is start into what we call base. Because once you get below 12%, you got to start watching what we call a transition. Is it going to go from going down? Will it transition and go back up? How do you know that? Well, when it gets down below 10% right here, the K factor, see it right here, the K factor gets below 10%, you got to start looking out that the deal is done. The selling is all over, okay? So how do you know that? Well, we look for a signal. For example, we found a good signal right here. That's called a capitulation candlestick right here. You see that tail? That's a signal when this is below 12%. And you got this tail. That's called a capitulation candlestick. It's a signal that all the selling is done. See it right here? The selling is done. Now, what is that? That tells you that, now it's not 100%. Nothing's 100%. Remember, everything's a gauge. Okay? So what happened is this was red, solid red when it went down. Okay? And then what happened was buyers came in. Okay? The big institutions. And that's why you see this shadow here. That's telling you big buyers came in. So you waited for the red line to get above yellow. Remember, you don't buy unless the red line right here is above yellow. And you don't buy if you're new unless you're above the 33%. Now, why do we do that? Because the 33%, it tells us that we have a 72% chance. If you start buying this right now and she starts going up, 72% of the time when it hits this red line, see it right here hitting the red line, see how it failed? So this could go up just like this did, but when this hits the red line, 72% of the time it breaks and fails. So we don't like beginners doing that. Only experienced members who are trying to make money from here to here. So right now, this guy is in a transition CLF, and what we're hoping, it makes that W formation right here. See it? So if you get a W, see this W? That's a buy signal. When the right-hand side is higher than the left, that means new money is coming in. When the red line is above yellow, this is a perfect buy signal. But what we're missing is this. We're not above 33%, so it's called a risk-on trade, because if you buy it now, you got that risk. It hits here and breaks. But the other thing we're noticing, there's no energy. You see the volume? This white line is your average line, volume line. When you buy a stock, you want the W, which tells you new money is coming in. Okay? When you have a stock that looks like this, where it's just, if you have a stock that looks like this here, where it's just a V shape, like this, and it's going up, okay? That just means the people who shorted it bought it back. When you have a W, it means you got those people and you got new people coming in. So you always want that W formation, and you want the strongest W you can find. And the strong W is the one where the right-hand side is higher than the left. That's the big buy signal right there. And the reason, again, you want that buy signal, and then you also have W's that look like this. You see that nice W formation here? And you notice how this one is above the red line where this one is not. So this is called risk on, buying it here. If the red line is below the yellow, you don't buy it at all. If it's above the yellow, you can buy it. But remember, you got to be careful going into here. This is perfect. This is what you're looking for, like this. And see that W? That's exactly what you're looking for right there, okay? And if you can find that kind of a W on one of your 5 stocks, you got it made. Here's another one. See how this just starting to go up to red? And see the V shape and see the beautiful W? That's a buy signal. Now, you don't have to worry about any of that on this chart. Okay, on the MV2, it just turns green. If it's green, you buy. Okay, but again, you got to wait till this red line's above there. So this is a good transition. So why don't you watch it next?
All right. Next up, AMWD on the MV2.
AMWD.
On the MV2, right.
Okay, AMWD. Let's take a look at it on the MV2.
Yeah, they just want your opinion on it.
All right. So what we have on this stock right now, we've hit the 80%, and you can tell it's having trouble here. It can't break out of the 80% right now. And why is that? Well, it's always volume, okay? Matter of fact, if I look over on my volume chart, you can see my white average line right there. See how the green bars are below it? So it's just volume. So does that mean you get out of it? No. And not unless this red line right here, if this red line crosses the yellow, that's not going to help me. If the red line crosses yellow, okay, if this red line crosses over like this, then this turns red. Then the third day it turns red. Then it's a sell short. So you switch from buying to short. If it turns and goes up, the red line turns and heads back up like this, that's good news. And then what you're doing is you're waiting for candlestick to engulf this, and the best place to buy it when it gets above this high right there. Just wait till it gets above there. Okay, so you got a good chance of still going higher, but you also got the opportunity, if it breaks down, to make money when you short it on the way down. And the beautiful thing about the MV2, it'll tell you, because it'll turn red, time to sell short. Right now it's telling you it's still green next.
Yeah, just consolidating. Next up,
just consolidating, that's all it is.
XBI.
Okay, XBI.
Somebody says that they have 27 shares on a scout for the long side, and they want to know what to do with their 27 shares, whether they should add or maybe take profits.
Well, let's bring it back for a year. You always want to bring your chart back for a year to see if you have a energy stock, okay, high energy stock.
Power stock.
Okay, what we call a power stock. And yes, we do, okay, because you can see it's making new highs, okay, and it made a new high over the year. And that means the institutions, the hedge funds, are buying this thing. They're parking
Look
their
at that
money
volume.
Yeah, and you look at the volume on it. So this is a good day. If you're on this chart, you'd be adding to your position because it engulfs. See it right here? And this guy is a nice momentum, okay? Here you're hitting the 80%. And you got to be a little careful on this chart because you're in this chart for 2 to 5 days. If it hits 80%, what you really want to do is switch over to this chart so that now you're going to take advantage, even though it's at 80%, and it could come down, like this one could come down, but that's okay because if it turns red after 3 days, then you want to try to catch this thing when it turns, comes all the way down again. You want to catch this going all the way down. So your purpose of switching is you finish your 2 to 5 days, you now switch over. If it keeps going up, that's fine. It's a power stock. But if it turns and turns red and comes down, we also want the opportunity to catch money on the way back. Why? Because stocks go down much faster than they go up. So we'll continue to make our money until such time we get a sell signal like this. And then we'll get our third day, we'll sell short. Next.
Next up.
Good stock.
Somebody got in on GWPH. GWPH.
Don't do anything with Apple today, by the way.
It's range found. Okay. So and the question goes as follows. I bought GWPH after a big W. Can you confirm whether or not this is a trend reversal or not?
See, he bought this perfectly. See, he bought it at a W. The only thing he didn't do is he bought what we call a risk-on trade, which is okay. You buy the red when it gets above yellow. If the red never got above the yellow, you never would buy it. But he bought it because it's above it, and that's a good thing to do. And you got to be experienced because remember what I taught you, that we know that 77% of the time, okay, she's going to fail when she hits this red line right here. See it like this did. So he's trying to make money in advance.
They're seeing it bounce off the 50 days, so they're a little worried today.
So I'd be more worried not this bouncing off the 50, that you're going into 33. So what I'd be doing, I don't know where you got in, but I would probably reduce my shares to a scout.
Yeah, something you don't have to worry about, right?
Yeah, so not to worry about it. And then what you do is when she breaks out, if she breaks out above this 50-day moving average line right here tomorrow, and this breaks above 33, you're on your way. But what you got to worry about now is, will this hit the 33% line and fail and pull this back? So you did a nice job. You got a nice W. Don't get out of it. Why don't you put a scout on? Just keep 1 or 2 shares, and then let's see what happens in the next couple of days. But that was a perfect buy signal. The only problem is you got in a little early, which is not a problem as long as you understand the risk of it. Next.
Right. AMD.
And look at this, turn green. See, if it was me, once it gets above this red line here, I'd be in this guy. As long as it stays green, and just let me run it all the way up. Go ahead.
All right, so AMD, that's been a popular stock the last couple of days. Somebody's holding 100 shares at $11.99, and they want your opinion on whether you think that this is going to hold above that R1.
Okay, AMD, the first thing you look for if you got a good stock, if you're doing a swing trade 2 to 5 days, you want to see if you've got higher lows. And you do. That's good news. What does that mean, higher lows? Well, here's your low, went up, came back. Higher low, went up, came back. Higher low. That means that your stock is getting the momentum it needs. It's getting the energy. And you can see it here. See this red line? It went up through 30. The yellow line went up through 33%. You're getting the energy, okay? This is good news. But now you're going into R1. That's a very tough area. That's like putting a steel I-beam above you. It's like trying to get through, it's like trying to use a piece of paper to try to push through steel. That's how strong this is. So what you should do is, I don't know how many shares you have, but let's say
they have 100 shares at $11.99.
Okay, 100 shares right now. I'd be taking my profits off the 100 shares.
Absolutely.
I would leave 1 share on, okay, just as a scout, okay. Or I take all my profit and then I put in advanced order. If it hits 1375 or higher, it gets filled. But what you can do, take your profits today. We always teach, it's a golden rule. When you hit R1, there's a reason I designed this to be R1. It tells you that, remember, that's where a lot of sellers come in. And now you got a spindle. What's a spindle tell you? When you got a shadow on the bottom and a shadow on the top. A spindle, see it right here? That tells you it's indecisive, okay? And it may want, and it had, if it's just a doji that looks like this, okay, that's telling you, if it's just a doji, it's telling you it's indecisive, okay? But when it's a spindle, it's telling you that you have a high probability it wants to come back down this way, okay? Spindles tell you it's going to spin the other way. Does it always do it? No. Okay, but at least you got to know that. So that's why you don't add to it. So same thing here. So don't add to it. Take your profits and then go back, add it back in once you break out. Okay, once you break out next. But you got everything going for you. You got beautiful momentum. You just need a little more volume. The reason we're not getting the volume, because exactly what I said to you. Here's your stock right here. This is a good lesson. Here's your stock, right? Okay, underneath your stock is the stock market. You got to push the stock market up with what? You got to push the stock market up with your bank stocks. So if your bank stock's not doing well, it can't push up the market, and the market can't push up your stock. So let's take a look. So let's look at the bank stocks, XLF. Okay? And see the bank stocks not doing well. So these bank stocks aren't pushing up the stock market. Let's put up SPY. You see, the stock market's not being pushed up. So the bank stock can't push up the stock market, which can't push up your stock. And that's why your stock, which was AMD, that's why your stock is stuck at R1. Because, again, you got to get the banks to push up the market to push up your stock. A stock can only go up 1/3 of its distance on its own, and it will fail. That's why you need, and that's why before you buy a stock, you always check and say, what's XLF doing? Okay, and what's my market doing? Okay, so if it's telling me my market is not doing well, in fact, what I look at is XLF first, and I want to make sure SMH is going up too. But in this case, the semis and the banks are both falling apart. See how the semiconductors are down here in the banks? So that's telling me both are giving me weakness and why the market's down today. So that means my stock, AMD, is not going to do well today. Now, if AMD goes up, blast off, because of some rumor or something, that's called relative strength. Yes, that can happen, and that's a good thing. Okay, market going down, your stock's going up. But overall, you can't bet on relative strength. You got to make sure to very few people ever look at the banks, the stock, and their stock like this, and you should. And if you don't do all that, because it's a lot of work, right here, it's green, it's going up, just stay with it, because you're going to be into this for 2 to 5 months. It's got a spindle, just pull back a little shares. You haven't got to do anything else. You ain't got to worry about anything else, because you're into it for a long time. This is a position trade. This is a swing trade. 2 to 5 days, 2 to 5 months, or 2 to 5 years. That makes a big difference, okay? But the one thing I always do look at, though, I always want to make sure I got my highs, I have my higher lows. That tells me I got power, and this looks like this. It always helps me. Next.
All right. Next up, TEVA. TEVA.
You've got to check and see what your banks are doing. And the other thing, too, go back, always bring your back for a year, because you want to know if it's a power stock. See, when you bring it back a year, it really tells you the story. This is a pretty bad stock, right?
Oh, yes. Oh, yes.
And see these lines above it right here? Remember what I taught you? That's called our
Enron effect, yeah.
And the Enron effect, what does that mean? And I showed you before, if people that were in Enron, they all lost their money. They shouldn't have lost their money, because when the Enron was underneath these lines, like this stock is underneath these lines, that's tremendous selling pressure. And every time they told you buy it and went up, it would fail. Go up, it would fail. Go up, it would fail. And I had my gang, we shorted it back there, right back here. And then, see, I had to stop. I told everybody where to put their stop.
That was 2001.
Yeah, 2001. I'll never forget this trade. Actually, we started up here. When it first fell apart, it gave me a lower high, which is always a very good start for a short. But when it finally broke here, and then when everybody on CNBC and Kramer kept saying, buy it, buy it, buy it. And I kept saying, no, stay short, because these three, okay, these lines right here, we've added a few more since then. You can't get up through there. It's very, very hard. So when you got a short like that, just go with it. Now this stock, what you're trying to do, now I brought it back a year, it's changing. It's trying to do a transition to the other side. You got a W out of it. So now, and you're above your red line, which is good. The problem is there's no energy. See the white line? That's your average volume. You want when you add to a position, you want these green bars touching the white line. And if they're not, don't add to it. Or if you are, just make sure you don't add much. Or if you got a doji like this, you don't add. See it? A doji like that. Or a spindle like this. Spindle means it could turn the other way.
So
doji just tells you it's going to sleep.
So they got in with 50 shares at 30.70, and they are going into R1, which would imply that they take profits.
Yeah,
That's
you
right.
always take profits going to R1, then set yourself up. I'd put a setup. I'd buy it again at 32.66 up here. Or I'd keep one share, so I stay engaged with it, a scout, and then when she moved up, I'd buy it up here. Here, if I'm just doing this, and I'm a very busy person, I don't have time to do all this stuff over here, I would just wait, and when I get a good day like this, where I get another candlestick that engulfs this, doesn't have to be that big, and as long as this guy's going up, I don't have to worry about volume. Why? Because anytime a candlestick engulfs the previous day, it means you got enough volume. It measures volume. That's why we always look for a candlestick, and then we say, when you get the one that engulfs it without the wick or tail, buy it, because it's telling you got enough volume. Okay, that's why we tell you that. This is so easy. It takes no time. Okay, it's a little harder because you're trading it 2 to 5 days. Here, it's long term.
All
Okay.
right. Next up, MS, Morgan Stanley.
And look at this. This is beautiful. Look at these right here. That's called, it's got beautiful momentum. Morgan Stanley was the one we bought last week.
This person joined us. They got in at 43.30, and they picked up 25 shares. They're wondering whether or not this could be forming another W and possibly take out R1.
Well, here's the thing. You remember, what do you always remember about trading stocks? Your sweet spot between phase 2 and phase 3. That's where you make all your money, between phase 2 and phase 3. Okay? So, and here's your phase 2, right here, broke out, and here's your phase 3. What does that mean? That means that That's your highest probability of making money. See it right here, I'm sorry, in this chart. So that means you got in here, phase 2. You should take your profits going to phase 3, and you're almost there. So I'd be taking my profits going into here right now. Then what I do is I'd switch over to here to go long term. I go from a swing trade 2 to 5 days to a position trade 2 to 5 months or 2 to 5 years. Okay, and I just would wait for a nice new candlestick to come in, break out like that, and then continue up with the idea. Now that I've finished phase 2 and phase 3, if she turns and comes back down, I'll catch it and make money shorting it. But sometimes with this market, what they're doing is they're printing money every day to artificially push the market up, okay? And then they try to cover it by telling us that the economy's doing nicely. Look at the consumers, how strong they are. Well, they're not strong. They're putting on all kinds of debt, historic debt, because they're dropping what? The rates for them, and they're dropping the credit for them, so that it masks what their real intent is to artificially drive this market up. So always remember that. So let's just make money. That's all. Keep going.
Follow those charts.
Follow the charts, not the fundamentals.
Oh, God, no. Clack.
Money, money, money. Follow the money.
Clack.
Clack, okay.
Somebody wants your opinion on both the charts, MB1 and MB2, on Clack.
It's a pure short. The red line is crossed through by 80%. Remember, when it gets through 80%, and once this red line crosses 68%, it's almost 90% of the time it will complete its short. See, when you break through this yellow line first, and you break through the 80%, when you break through 68, that's like your go line. It says go, because you got a high probability, about 90%, this will complete its short. And this is what it's been doing. See it? It's a beautiful short. So right now you're heading down and you're catching support right here.
That's S1 right there, big one.
Yeah, you got two supports. You got your S1 support is like your R1 going up. You're trying to get through a steel I-beam with a piece of paper. When you hit S1, it's like you're trying to get through a steel beam with a piece of paper going down. But you got another added problem. See this blue line? That's a 100-day moving average, or support. It acts as support, but it also acts as resistance coming down. If you're above it and you were buying the stock, it was acting as support. Like, see right here, when it came back, it didn't go down because it acted as support. This is still support. But see this here? It's telling you the momentum, everybody's selling it. But why isn't it broke yet? Because you got buyers here. That's why I designed the chart, to show you where your buyers are, these lines. And then you see this is a big hit. This is your 100-day moving average. All the hedge fund managers use this one. And they're not going to sell it short till it breaks through here. Okay? So just wait till it breaks through and then start your short again. If you're in it, short, just take some shares off and be patient.
All right. I'd like to say hello to everyone one more time. Thanks for viewing us. This is a special preview class, and we do this every day from 9:30 to 11. And all of this is archived on our webpage at philsgang.com for members. And I'd like to thank all the members joining us from the United States and all over the world. We even got somebody from Belgium. So thanks for joining us. Thanks to all of our Danish watchers. And again, philsgang.com if you'd like to subscribe and get this daily, 9:30 to 11. Next up, Phil, what do you think about Ralph Lauren? What have we been doing with Ralph Lauren? Just give your opinion.
And to add what JR said, if you're really busy, what you should do is just follow me in the exchange-traded funds, okay? And more people are going with exchange-traded funds. I said last week, the history of the stock market, only one other day was higher volume than last Thursday. But where did $28 trillion came into the market? $28 billion came into the market. Where'd it come from? What's it doing? Where'd it go? It didn't go into stocks. It went into exchange-traded funds. It went into your spiders. It went into IWM. It went into your, all the different traded funds, exchange-traded funds that we trade. And that's why I invite you to follow the ones I'm in. And I use my MV2. I'll give you an example. UNG was an exchange-traded fund for gas. Okay? And we bought it right in here. When it turned green, we bought it in here. And and I got out about 7%. I took a 7% return. Others stayed in, caught 14%, and then I shorted again. When it turned here, started to go down. I shorted it here, and picked up about 6%. So I picked about 7 going up, 6 going down. See, 7 going up, 6 going down. So what you can do is join the gang and just follow me on my MV2 and follow the actual exchange traded funds I'm in. Okay, and then you don't give me your money. You're not joining a fund. You just buy UNG, go to some online broker, and then at the end of every night, I will do a video, tell you what I'm doing with the exchange traded fund. And what I'm going to start tonight is doing a video on my 5 individual stocks, so that, like the other day, a lot of people didn't catch Intel because they didn't hear me say, because they weren't at their computer, so they didn't hear me say,
Shorted,
you know,
right?
if it breaks this support, make sure you add to your position. They would have caught a beautiful drop this morning. So I'm going to do the same thing with the 5 stocks. Every night I'm going to give you a video so you know exactly what to do.
It'll be posted on the alerts page for all those listening.
Yeah, I don't know why the alerts aren't coming up.
It should be up. It's up there. See the tab on Oh, you're logged out.
Yeah. All right, we'll do it later. Go ahead.
Next up, where are we at with Ralph Lauren again?
Ralph Lauren, really simple. Ralph Lauren is one of my favorite stocks. This stock has gotten creamed, okay?
Wow.
Now, and that's the stocks I like to buy that nobody wants. And Ralph Lauren, we bought Ralph Lauren at 69.27. Okay, so it's now 70.46. I'm trying to buy it off the bottom here. It's trying to, here's the year. See, it was beaten down, and so I only have a scout on it right now. Okay, just a scout.
Hopefully, this is what this person has as well.
Yeah,
right?
I got like 2 shares on it. Okay, because until this red line gets above this line here, I don't want to own a lot of shares. So really, all I'm doing is watching it. I'm engaging it. Then what's going to happen is once this red line goes through, and then I'm on because right now, once that goes through, that'll be my phase 2, starting my phase 2 right here, and then I'll get out at phase 3. And the reason why you want to get in phase 2 and phase 3, this is where all the smart money goes, because see these guys here who sold short, they got to buy the stock back. So if I made $5,000 shorting this, I don't get my $5,000 till I buy my stock back. That's what pushes the stock up. So your phase 2 to phase 3, sometimes what'll happen, it'll push you up this line halfway up with no buyers, meaning they were just the people who shorted who are buying back. You get like a bonus. And then the rest of the way is when new money comes in. So that's why they call it the sweet spot, the easy money. This is where all the pros buy, phase 2 to phase 3, because they get all these people here who shorted now buy, pushing the stock up. Even if the company went bankrupt, it'll push their stock up because they have to buy it. Okay, but wait till it breaks out, okay, and then add to your position, all right? But you got to wait till it gets above R1. And if you're on this guy here, same thing. Wait till your red line's above 33%, right? 32% right here, and then she goes up right here. Add to it or buy it. I think Ralph Lauren, like all these beaten down stocks, you get people who start going after them. They don't want to be paying for Facebook, and they don't want to be paying for the 5 big stocks.
3M,
yeah. So they go and they start looking for good name stocks, brand names that are real cheap. Okay, by the way, while we're doing that, let's look and see what the big guys are doing here today, because this is very important, because they're really worried. The market's really worried. Okay, the gangsters. See, they're trying to push Facebook back up here. They don't want Facebook to drop. So they printed money in the last few days to push it up. Okay, and they're trying to get a new high on Facebook. They're going to try to get a new high on on Amazon. Okay, see it right here? By Friday, they'll push it up to here probably. And they're trying to get a new high on Netflix, Amazon, Netflix, Google. Okay, they're going to try to push this up by Friday, and then they're going to try to get Microsoft. Okay, and they're going to try to get Apple. So what they're doing, they're in full phase blown printing of money, giving it to the banks to push these guys back up. Okay, because they're so worried. Because why? If they don't take the leadership, the dollar will collapse, gold will go up, and the dollar will collapse, the yield will go down, signaling the weak economy going forward, and a lot of selling comes in. So to prevent the selling, these 5 stocks are only 6%. They make up 6% of the market, but they contribute 40% of the 256% rally we had since 2008. That's how important they are, but that's how dangerous they are. This is the only thing that's keeping the stock market up, is these 6 stocks. Next.
All right. Next up is XRT. Just your opinion on XRT, what your thoughts are.
XRT is a great exchange-traded fund. Right now, this would be a good guy to short, okay, if she would just drop here. But the problem we're having with our shorting, we can get in these beautiful shorts, but they don't go anywhere. Because, again, what are they doing? They're printing money, trying to push the stock market back up. So there's very few shorts around. That's why you can have the best short in the world, but it doesn't go down. And when shorts go down, they go down 10 times faster than going up. But it doesn't help because, again, when everybody is buying they're printing money and putting money into the banks, that's why you got to watch, see? And if the monies aren't going, see, and we're seeing, wait a minute, there's not much money going in the banks today. Woo, that's a problem, okay? So... And that's the leadership group. They're trying to push money into the banks, and they're trying to push money into the 5 big guys. It's not happening. So that's why the market's not doing anything. It's only up 10 points. So they're going to try to keep this market from falling is what they're doing. But one day what's going to happen is we'll wake up one morning and we'll be down 300 points because nobody's bigger than the market. But what it's going to take is an event. Like in 2010, we had a flash crash. The market collapsed in like 10 minutes, 1 minute. And then in 2011, they changed their AAA rating on the United States to AA rating, and the market crashed like in about, I don't know, maybe I'll say 12 minutes. And so that's what you need. And they stopped the flash crash the other day because remember, the whole thing for the stock market is everybody's spoiled. Nobody wants to stop. And Trump, who is our hero, who is going to come in and stop all this nuttiness and call it what it is, a big, fat, ugly bubble, he's now participating with it. His ego got involved. Now he owns it, and he wants to come up to here. Okay? So, and the more we push the market up, the worse our economy gets. Because what have I told you? What are bubbles created from? They got to have an excuse to create the bubble, which is low interest rates and easy credit. So they got to prove that there is an environment of low wages. And that's why companies aren't plowing their profits into capital investment, new machinery, new computers that increases wages because they don't want wages to be increased because then they can't build the bubbles. So it's the 1% who's captured this whole market. Wall Street is artificially just taking control of it. And Trump, he was going to fix it, he said. Now he's taking control and he wants to run it higher. So that's great for us. So that's why I tell you, just get your MV2, it stays green, buy. So this is beautiful. Next.
One of our new power stocks, NLY.
Yeah, NLY. This is
just do a review on NLY.
NLY, let's bring it back a year, see what we got. Okay, new power stock. Okay, now this is a good power stock because of pricing. But you got to be a little careful. The reason why it's a $12 stock and it's not a $213 stock, okay, is because, again, there's not the interest. You don't have the volume, okay? You don't have the, I'm sorry, you don't have the interest in this thing, okay? You got some pretty good volume in this. Well, I mean, not
like 3M volume.
No, not like 3M, don't mistake. I mean, you got, what's that? I can't see.
Well, actually, that's a 1,000,007 average volume on that one.
1,000,007 average volume. Okay.
But that one's a big name.
And NLY is what?
It's actually 6 million, but a lot of more people are holding 3M in their 401ks than
so
NLY.
6 million. So that's why the stock, but it's still a very good stock, but just wait until it breaks out and makes a new yearly high and add to it. And you start out, remember how it works. Let's say this starts out tomorrow, it does this. So the first thing you do tomorrow, it breaks out. Start. Go in with 25 shares or go in with a scout. Buy 2 shares. Then wait for the second day, it goes up. It's the third day where you go and you can buy your 200 shares, 500 shares, 10,000 shares, whatever you want. And then all of a sudden you look back in a week, you're up here, you look back 7 weeks, you're way up here, and you go, oh man, I should have been doing this all along. Power stocks are a beautiful thing because it's where the hedge funds park their money. And that's why I go for the strongest ones, like 3M, okay? Because all the hedge funds have 3N. All the 401ks have 3Ms in it, see? So, but these are also get hit the hardest, though, when they go back down, too, because people panic to get out.
We'd need that cataclysmic event, though, in order to
Right,
pull
but
that
see,
off.
it's red, so that's telling me to get out. That's the beautiful thing here. It's telling me to get out right now. Take my money out, so I'm not going to get hurt. See, that's why I designed this chart. Next.
Next up, AXP, American Express.
AXP is another one of our power stocks, okay? And look how nice it's doing. And remember with a power stock, what I teach you is that you got what we call the cluster. What's a cluster? When a cluster is tight, the tighter the cluster, okay, the width right here, the better. If the cluster expands where there's more volatility, where stocks go down to here, then back up to here and down to here, that's a very weak power stock. The tighter the cluster, the better the stock. Next. This is looking good. Just wait for tomorrow. Same thing over here. One more high. Just look at it. Beautiful. But see, you're going to soon have to move over to your, you don't have to, but you should move over to your MV2.
It's a good idea, too. Yeah.
The reason, because you want to catch it on the way down. So let's say you move over, now you get another 3 days, 5 days, or even 6 weeks.
That's
Who
fine.
cares? You want to catch this now on the way back down. So when this thing breaks, this is how you make money in this business. When this turns, why aren't you shorting it when it turns red? Next.
All right. So what's your thoughts on Cisco, CSCO?
I looked at Cisco the other day for everybody, okay? And Cisco has a
rings
nice
bells.
consolidation, okay? And I like consolidations because they become very powerful. And when they break out, they usually will go up the same width they're wide. When they consolidate sideways, they tend to go up the same exact width, okay? They're sideways, they tend or go down. This has a problem. It's not above the yellow line yet, okay? So it's not breaking out. If this can break out and get red above yellow, start buying it, okay? But you also want to be careful on this one. Don't add a lot of shares till you get through the 50-day and through the 100-day. So just make sure as it goes up, each day your candlestick, what I do, when I have above me these areas of sellers, these areas of resistance, what I do when I buy the stock, the candlestick, each day I just manage the candlestick over here. I want to make sure Cisco, let's say for the sake of argument, I buy Cisco tomorrow, okay? And it goes up like this, gets through R1. Okay, I come over here and I want to make sure it's at 80%. I don't buy the candlestick or add to it unless it's above 80%, because that's telling me I got enough power. If it's below 80%, I don't buy the candlestick. Same thing over here. Next.
All right.
But it's looking good, though. Cisco, it's like our IBM. See, these are consolidating. See, these are all good stocks. The problem is there's no buyers, because all the money is being pushed towards the alphabet stocks right now.
And when SPY is going sideways, you don't get that 30% boost you were talking about earlier.
And everybody should put an advanced order on this right now. Right at I don't know. Just do an advanced order.
157.25, 157.30.
Yeah, 157.25 would be fine. 157.25. If it starts breaking out through 157.25 and this red line, if you're new and the red line is not above the yellow, then cancel your order.
32%, you mean?
Yeah, the 32%, cancel your order if you're new.
Yeah, and
The reason why, because a new person, if you get up, your stock starts going up, and you hit this red line and it collapses, you get discouraged and you're brand new and you quit the gang. You don't give it enough chance. You get mad.
And also, you want to do advanced orders with a scout, something you're not really going to worry about. PANW.
But the way you're going to make money, and I always tell you this, and you don't want to believe it, you stay with those same 5 stocks every day.
So PANW, somebody entered in 110. And I don't know how many shares, but they're wanting to know what your thoughts are.
Well, my thoughts are right now, I would be out of this because here's the problem. You got right now, there's your high, there's your lower high, your volume. See your energy right here? Remember, see this white line? The bars aren't hitting it. So what does that mean? Well, this is energy. And that energy is harnessed. These are buyers. And that energy comes down and translates into pricing power. See this red line is momentum. The momentum. And the momentum is going sideways rather than going up like this. See, it's going sideways like that. So it's telling you money is not going in. And you can see why. Because we're not at that white line. So there's not enough buyers to push this up. It's going sideways. So that means this could turn around and drop on you, especially when you got a lower high. Okay? Remember, lower highs are sell signals. Lower highs are sell. It's just like if you had a head and shoulders here, you got like a half of a head and shoulders. And usually when you have a lower high, like a head and shoulders here, here, and here, they usually break this way. Same thing, when you got a lower high, okay, they usually break this way most of the time. Next.
All right. AU.
Okay, AU is gold.
Yeah.
All right.
I'm sorry, UA. I'm sorry.
UA is another kind of gold.
UA.
Okay.
UA is Under Armour, actually.
Yeah,
and
UA it has gold tires and armor, I guess.
So
Okay.
Under Armour, this person entered around $19.
Yeah.
And
Okay.
it started to go down. What do you think they should do?
Well, believe it or not, this is not a short yet.
Very neutral, actually.
Yeah, because this red line has not gone through yellow. Believe it or not, this could turn around and shoot right back up. And no people don't believe that.
It's true,
but
though.
It's true. So until this breaks through, I would just reduce the amount of shares I had on and wait and see, okay? Now, if she breaks, start shorting it. Switch your position. Okay, next.
On that pattern, though, that's that classic flagpole that we warn about with the V shapes. We need W's.
Exactly right. It's a good point. See this right here? This is called a V shape. There's no W. Good point, JR. Good point. We warn people on V shapes. Remember I said from phase 2 to phase 3, you got all these shorts and they come in and they buy. If you're short, let's say I made $5,000 right here, I got to buy my stock back. So it goes up. It's a V. See it? The problem with a V, they're called flagpoles. They can retrace all the way back to where they started. See how this one's doing that? Okay, you need W's. Okay, you got to have W's. You need this. So you need a W here and a W there. See, that's what you need, because a W tells you what. If I had a W, let's say one right here, and I had another W right here, it would never have come back down, because shorts stay away from W's, okay? Because that's new money coming in. So who's going to short new money? Okay, so always remember, when you get there, it's exciting when your stocks go up and you see your candlesticks going up. And by the way, when you have a V shape, you're not trading the stock, you're trading the candlesticks. And just look on this chart and make sure they're always at 80%. And then buy the candlestick, because you can't buy the stock because you don't have a W, okay? You don't have the right momentum. You don't have anything going for you that way. V's are just short coverings.
Right.
Next
up. All right. So, question about the pending crash. So, this person says, in the recent past, you talked about the 3 different stocks as well. You talked about diamonds.
Yeah, the diamond.
XLU and IYT, the transports.
Right. Oh, you're talking about. I know. All right, you're talking about the transports, and you're talking about utilities.
Utilities, and then the Dow making a new high.
Yeah, the Dow, exactly.
So
it gives you a signal.
So the person writes, the Dow's making a new high, the DIA.
Right.
Utilities are currently going down. So let's take a look. DIA, yeah, it kind of made a new high.
What's the utility? What's symbol using?
XLU.
XLU?
Mm-hmm.
No, that's not right. That's you. XLU is not utility, is it?
XLU. Yeah, see. So XLU's not doing so good, and the transports, IYT, are also not doing so good.
All right, so let's break these down, okay? What you're looking for is you want the diamonds, Okay, you want the diamonds to be going up. And the signal you're looking for is you want to see if the transports are going down. So let's look at the transports. All right, if you're looking for a crash, the transports, it's not really going down yet. If you keep continuing going down, it makes a pattern. Then what you're looking for is this. You're looking for the diamonds to go up like this. Let's do a line chart. Okay, make it easier. You want the diamonds going up. And if all of a sudden you start seeing the utilities, okay, going up with you, and then all of a sudden the utilities break, and utilities keep dropping, and the Dow, the transports drop, and the Dow or the S&P keep going up. If they keep doing that quite often within a month's time, within 4 weeks, a lot of times you'll see the indicator, the line is going down on the transports, and the Dow or S&P is going up. That's telling you there's a problem. It's telling you that they're making more goods than they're shipping. So if you got the transports going down like this, and they're making more goods, that's what happened in the .com. All of a sudden there was so much fiber optic, they didn't know what to do with it. Okay, then everybody had to write it down on their books, and that's when the market crashed. So that's what you look for. Now, this is one good signal. So let's say Dow going up, S&P going up, and transports going down. You see that quite often. I see it as a pattern. The next one, if you see the utilities, if the utility stocks start to drop, okay, utilities drop, and so you say utilities go down at the same time you got this signal, that means interest rates are going to go up. They sense interest rates are going to go up. Utilities hate interest rates because utilities borrow money every day. So if you get a combination of utilities down, transports down, stock market up, that's a very, very strong signal that's telling you that a crash is going to be coming forward. But the problem with all this is they're printing money every day, and they're going to force the market up regardless of our signals.
That used to work before QE.
It used to work perfect. Doesn't work anymore because, see this market should have turned right here and came down, but they keep on pushing the market up, okay, with easy money. And that's why they don't raise rates. She's a liar. She didn't raise rates. Remember what I said? Bernanke back here in 2 years, increased rates 17 times from 1% to 5.5%. She in 2 years raised it 0.75%. Are you nuts? Because she's a liar. Because she knows if she raises rates, she's raising payments, and she knows the economy really sucks. But how they fool you, they sell you into the idea the economy's doing great by showing you the stock market. And as I said, they do it by simply, printing money and then buying stocks to push the stock up. But they need to have cover. So they go to this group over here called group thinkers, who go to the market and say they follow anybody. So what happens, they count on them, say, look, we're going to drop interest rates for you. You can buy your snowmobile, your car, a gun, low interest rates. Oh, by the way, if you can breathe, you're going to get qualified. So they know they'll take them, and they'll start over here. This will start going up. And the way it really works, which is interesting, is like this. The way it really works is like this. What happens is the stock market, they'll start taking and printing money, and the stock market will start pushing the stock market. God damn. The stock market will do like this. Stock market will start pushing up. Now they got to mask it because there's no earnings. If you go look at the earnings, they're like -9, -6.5, -5.5. You look at earnings, you look at margins, all the bad. You're getting all the bad economic news. So they got to mask this. So now what they'll do is they'll keep printing money, give it to the banks to go buy stocks. The stocks go up. Now they got to push the consumer up. So they'll drop rates even lower, and they'll drop their credit. So they want this to go, the consumer to be going up like this. See, they always want the consumer in a race, okay, to try to get ahead. So the consumer, okay, keeps moving this up. And what people see at the end, this is they don't see that. All they see is a stock market. They don't see the printing of the money here and a consumer here in a race with it. So all they're doing in the stock market is masking the bad economy numbers down here. Here, you got numbers that are terrible. Okay, so the way they do it to make sure that they know that, for example, you're not going to look and see that we have a historic debt of $220 trillion, or we have the highest consumer debt of $60 trillion, or household debt of $13 trillion. Okay, they're not going to, you're not going to know about the terrible durable goods orders or productivity or construction spending's off. You're not going to care about any of that. As long as you see the stock market going to go up, and then they sell you into the promise. You know, they always sell you into the promise. But what their job is to create this bubble, and that's why the only way they can create it is they got to have start out with an environment of low wages, and that's why Obama never increased wages. That's why Bush never increased wages. They don't want people to, they want to keep people poor so that the big boys, to make another bubble, that's how they do it, because they got to be able to drop those rates and drop for the better good, as they call it. It's called the wealth effect. Over here, they did the same thing with housing. It's a perfect example. It's called Bush's wealth effect. And he tells you to go out and buy. Go out and buy. It's the American thing to do. Go buy. So what he's doing, he's got his guys over here on Wall Street printing away, and they're pushing the stock market up, even though the companies aren't making any money. So the stock market goes up, and they know that the group thinkers really believe the stock market is the economy. And that's how they get away with it. Then when it crashes, so they create bubbles. And then they start and they crash it, they'll start another one. And this one here, when it eventually crashes, they'll start another one. What happened with this one is the greed set in. We didn't have QE on this one. We didn't have QE. Remember how fast he raised rates from 1% to 5% in two years? She raised rates in 2 years from 0 to 0.75% because they're going to keep playing this game, you see? This whole thing has gone crazy now. So let's just make money with it. We're not going to sit here and judge it, okay? And we're going to catch it when it drops. So that's why this market's exciting. And that's why we say to you, stay with your same 5 stocks, okay? Because if you just stay with those same 5 stocks, you control your money. Remember, everybody loses money in the stock market. There's a high group of people that lose money in the stock market because they're trying to control the stock they buy. That's wrong. You control your money. How do you control your money? You wait for the setups to come, okay? As long as you got a nice W formation, right? You got good volume, right? You got everything set to buy that stock. And you don't do anything until one of those 5 stocks has that setup. And you always get one that was going to have that setup, believe me. And that's where you make money consistently. Stay with those 5 stocks all year long. Yes, you do some other stocks, of course, power stocks. We have some fun. But that's where you make money. Let the pattern come to you. So that's what's going on right now. So Trump wants to push this market. He wants to push this market up 10,000 more points. Okay, that's what he wants to do. I don't know how he's going to, but at some point, what's going to happen is the economy is going to be so bad, okay, that you fall into a depression. It's dangerous. And that's where we are now. We're in a very dangerous situation by keep pushing stocks up, with presidents of companies aren't pushing their money back in, called capital investment. Remember, your GDP, your economic growth, you need 3%. The reason is because our debt is growing so fast. When you have your debt right here, here's your debt going up like this, and you got your debt is going up faster than your economic growth. Here's our economic growth, and here's our debt. That creates inflation, okay? What that inflation does, it takes the dollar, okay, it takes the dollar and it drops it. Okay, and then it takes the 10-year treasury, the two signals to tell you what's going on, and it drops it. And that's the problem. When the dollar drops and the 10-year treasury drops, that is synonymous with a weak market. So what they try to do is talk up the 10-year treasury, and they try to talk up the dollar. And how do they do that? Just what they did last week when they had that election. And then they started, the Europeans came over, bought the dollar, and the dollar started to shoot up, and the yields started to shoot up. They didn't tell the people the truth, that it had nothing to do with us. And then they pointed to the following Wednesday that we're going to have a rate hike. And the dollar went up again, and the 10-year went up. So the market kept going up, and it's just creating a bigger bubble. So for us as traders, it's a beautiful thing, especially if you have the MV2, because all it is just follow the money, man. All right, so when's the market going to crash? It just depends on how long they can keep this game up and how long can they have people suffer. Look at the shopping malls. They're all empty, okay? Don't listen to this BS. They've all gone to, they've gone to Bezos, Amazon. That's a total lie. I pointed out, I said, give me any 5-year period. They said in 5 years, the stores lost $15.1 billion to online. I said, really? Let's go look at Bezos' statements. Show me any 1-year period that his business went up 15 billion. Total lie. You can't find it because the people aren't. They're not spending. They have no money because their wages don't go up, and that's done on purpose. Do you really think this country, our wages are stagnant in 20 years? You don't think we could turn this country around and get wages to increase if we wanted to? We're powerful. But the guys who control the country, they need that environment of low wages to keep creating these bubbles so they can get very, very wealthy. Now they're on cocaine here. They're on high heroin or something. So let it keep going. I'm disappointed because Trump is what he criticized Obama for. He's doing the same thing now, and he's part of the big fat ugly bubble. Remember he bragged about the $4 trillion in wealth he created since being in office? And it's right here on a stinger somewhere. But I almost died when he said that, because that's exactly what he criticized Obama for. All right, so what do we want to do in the meantime to make money? There's places you're going to make money. You're going to make money in oil, number one, because you got to go for the stocks. Look, everybody hates oil, all right? And all you got to do, and everybody hates gold now. Those are commodities. We need the dollar to go down. What drives the dollar down? Okay, what drives the dollar down, okay, is when you got to watch the bond market and watch the 10-year yield. And when the 10-year yield's dropping, like it's dropped since March from 2.6 to today to 2.1, the bond market is always telling you the truth, not the stock market. The stock market is a bunch of liars. The stock market never believe, because I taught you, the market goes up because of printing money. And they've rigged it so to make sure nobody's making money so they can drop rates, make you get in there and pile debt on. It's all about debt. And that's how they make money, moving the market up. So if you want to know when does everything meet to where it should crash? We're there now. We've been there. Okay? Look at the dollar. Look at this. So if I go back, I can go back a year on here. Well, wait a minute. No. Where's my dollar here? Here, look. See this? Here's the dollar. All right, that's 2017. Okay? Okay. This dollar collapsing, and then take the yield. 10-year treasury yields collapsing. They're both telling you the economy is looking forward is terrible. And when you look at the numbers, they're absolutely right. So why is it that the dollar's going down, but why is it the same year the stock market's been going up? That doesn't make any sense. That's by keeping an environment of weak wages, okay, and weak credit. And that gives them the excuse to print money. It's called QE. See, that's why they're going to do another QE. By the way, I'll tell you what's going to happen. That rate hike they had, the three of them, they're going to pull those back. And then they're going to do QE because this thing is so, remember I showed you like these bubbles are so crazy now, right? This bubble is so crazy, and you got the dollar going down and the market's going up. It's contrarian. When the dollar goes down, the yield goes down. The yield is the bond market. It tells you the economy going forward is terrible. It never lies. So they got the stock market going up. So, oh, no. Larry Kudlow. Oh, no, never believe the bond market. Always believe the stock market. Everything's terrific. We got green spouts all over the place. Really? So the only reason they can keep doing this is because they have the ability to lay on all this money. I mean, think about the money they printed. Just in 2 years, $2 trillion gave the very wealthy, who control 80% of the market, gave them $13 trillion in stock value. Stock value went up $13 trillion by just printing $2 trillion. They print $2 trillion, and the value went up $13 trillion. And who gets the value? The guy making $55,000 with his wife? No, just the 1 percentile. And that's why the market, it looks so crazy, like they don't want to stop. But that means someday it will, and we'll catch it all the way down. So it's an exciting market if you understand what's going on. It's a simple market because all they're doing is going to keep pushing this market higher. That's all that. And as soon as it pulls back, like they did the other day with the flash crash, they're going to come in, and here you are. They're going to come in and make sure, print money, give the money to the banks. They always pick 3 banks. They're usually J.P. Morgan, Goldman Sachs, and Wells Fargo. And they'll give them money, okay, to buy these stocks. And here we are on our way back up. Let me ask you, have their earnings gone up in the same amount of days? Has their margins, have their margins increased in the same amount of days? How about their management, return on assets? Has the return on assets increased in this 6 days? No, it's the pumping of money. So all you do, if you're on PT2, if it's green, you buy. If it's red, you don't. All right? Okay, so anyways, I don't want to keep going on about this. But they're struggling right now, man. They're struggling. Okay? All right, so it's a good time to make money because we're going to make money on those beaten down stocks, and we're going to catch this crash on the way down, whether it's a year from now, 2 years from now, or 2 minutes from now. But one morning, listen to what I'm saying. You're going to wake up, and the market's going to be down 300 points, and it's going to be that China, their rating got changed, or something like that. It's got to be a big event like that, and it will happen. In the meantime, let's make money. And if you stay with those 5 stocks, you will. And the reason is because, remember, when you have 5 stocks, and here's the theory behind the 5 stocks, and some pros only do 2 stocks. Because if you have the same 5 stocks every day, you become one with the stock. So, for example, if you have, and this is the theory behind it, if you stay in a stock for a whole year, okay, you get a year cycle behind you, you know exactly what this market, the stock's going to do. You become one because you're so focused on that stock. You know it so well, okay, and that's the idea behind it. You become part of that stock. And then what you do is everything you learn, find the W formation, wait till the red lines cross yellow and 33%. Add when you got another W. One of these stocks, you're going to have an opportunity. Over a month's time, you're going to have an opportunity. You need to just have one of these stocks give you a 5% profit over a month. We only have 12 months. So think about how easy this is. If you can have the discipline not to do anything until one of these stocks gives you the setup, all you need to do is make 5% a month. In some months, you don't even trade. Some months, there's no patterns. And sometimes you make all your money in the last 2 months of the year or the middle part of the year. Doesn't matter. But what you're doing is you're managing your money. You can't make money managing a stock because you have no control over the stock because of all the games that are being played. You have control over your money. Like when you're at a dealer, blackjack, you can't control the cards. You try to count them. All right, some people can, but what your job is to control the money, right? And then you become a better gambler. And it's the same thing here. You just got to control and say, no, this is not ready yet. I'm not going to buy that V shape, or this is not above this red line. It's called risk off. If you stay with risk off, like we said here, right? If you take a stock that is, and you decide, I'm going to put risk on, I'm going to buy it underneath the 33%, and all of a sudden you bought 500 shares, and you got in just before it hit this red line, and then you lost your money, whose fault is that? That's because you put risk on. So if you stay with risk off, and there's only a certain amount of patterns, not many of them, you'll make money. Okay, see you on the charts.
And before you all go, thanks a lot for all you people watching over the internet. We appreciate you coming. Remember, join us at philsgang.com. That's philsgang.com, and we'll see you all later.